today we're going to speak to two very interesting managements. First off, we have Man Industry and we're joined by Mr. R.C. Mansukhani, Chairman of Man Industries. Welcome to the show, Mr. Mansukhani. My first question to you is a big order win on cards. What is the kind of revenue potential that you're expecting from this particular order, almost a 1900 crore order?
So this order, 1,850 crore from the international bidding, from the international market, and the offshore pipeline. Ours will be supplied to offshore pipeline, and is a well-reputed oil and gas company putting up the offshore line.
Understood.
After,
right.
Yeah, sorry.
Go ahead.
Yeah. After this order, our order book is roughly around 4,000 crore. The mix of domestic order and export order. The export order approximately 3,600 crore and domestic order 400 crore. And this all will be completed. We are trying in 1 year, during the 1 year.
Understood. So, Mr. Mansukhani, this big an order win, what is the kind of revenue potential that you're expecting by the end of FY25?
FY25 revenue potential, you are talking about the potential, so we are trying to reach 4,000 crore. This year was 3,200 crore. And roughly 25% growth this year. Next year, we are potential for 100% growth from the 24 as regard to this new orders and some bid we had given in the international market, which is around 12,000 crore, as well as our subsidiaries company also going to start value-added products and synergy business also, which will also come. The 25-26 will be much better, higher EBITDA, higher turnover in coming time.
Mr. Mansukhani, Anushi joining in here. Now, I want to understand about the kind of order book that we are looking for by the end of March 25. So, your execution, you mentioned that it's going to be in the 12 to 18 months. I want to understand what's the kind of order book that we look forward to in FY25 and what usually is the kind of execution periods of your orders?
Right now, we have around 4,000 crore order book. Out of 4,000 crore, 2,500 crore would be the in current year, before 25 we have to do. The one in next 3 quarters, roughly 2,500 crore, and the next year will be 1,500 and plus new orders, which we are expecting the same trend of the growth in 25-26 also, and as well as to our other units also going to start, which is the subsidiary companies. So in consolidation, we are planning to reach 6,000 crore in next 2 years.
Okay, Mr. Mansukhani, fair here. Now, on the export side of the business, I understand that this is an international order. I want to understand the kind of margins that these international orders have versus the domestic orders that we generally get. Is it on the higher side?
Yeah, this is a higher EBDITA margin business because of the special uses of the offshore, where the special coating also needed. So this is a higher. We are anticipating 14 to 15% EBDITA for this order, as well as the current order and some low value-added water, which is our segment only 10%. So then if you see the water, oil and gas and export, the mix of the order, the next year we should reach around between 12 to 13% our goal to reach the EBDITA, which will be much better.
Got it. Mr. Mansukhani, you're diversifying into new segments of stainless steel as well. Give us some color as to what is developing there. What is the kind of capex that you're planning in the stainless steel side of things?
Yeah. The SS plant is coming in the Jammu, which is a project cost approximately 500 crore. And all the equipments, the major equipments we ordered 1 year before, which is going to get the delivery in a few months. And we are planning to start on 25th onward. And that is a high value orders, high value product line, which will be give the additional revenue in first year around 800 crore, and then slowly we'll improve it. As well as to our own pipeline business also, we are doing some expansion and some diversification. Also, debt revenue also improved as a ERW also we started. SAW, ERW, SS, and again the value-added product, all including the basket, we will be in the range of around 6,000 crore next 2 years.
All right, sir. So considering this capacity addition that we are making in the stainless steel pipes and the ERW, I want to understand what is the kind of capex that we've laid out for this year and going forward the next 2 years as well, if you can give us an outlook on that.
Right now, our capacity is roughly 1 million ton, and then we added 150,000 ton ERW, which is already started 2-3 months before, 3-4 months before we already started. We got all the accreditations, API, monogram, etc. Jammu, we are coming around 25,000 ton seamless pipe, which is a high value product. And some companies plan putting up the plant in abroad also, which will be the additional revenue. The capacity would be around 500,000 ton, where some approvals required, and then work is going on the full speed.
Understood. And Mr. Mansukhani, considering all of these capacity additions, in Q4 your capacity was around operational, I mean utilization was around 45 to 50%. So FY25, what is the kind of utilization that you expect, by the end of FY25, let's say?
Still, although this time we are very busy, but capacity utilization 60-70% is going on, and we will see the near future. Mostly we are going to utilize more capacity rather than putting more money in the company. Although our company is debt free, we have a surplus cash around 200 crore end of this March, 24 March. So we, without getting the additional load of the company, is a debt free. The more revenue, more profitability, more EBITDA improvement. The company mission is getting much more benefit to our shareholders.
Mr. Mansukhani, I'll stick to these two segments that you're bringing in. Now, over here, if you have to look at your margins in general, 10%, which are expected to remain flat this year, but in the next 3 years, you're seeing 15% of margins as per your last conference call. I want to understand, like in the stainless steel pipes and the ERW, what are the kind of margins that they have as compared to the other segments of your business?
We are taking the blended EBITDA, which will come current year, little improvement to last year. Although the revenue will increase, we are anticipating between 11 to 12% current year, and 12% to 13% next year, and then 26, 27 onward, the full fledged there will be much higher, but this time we cannot announce, but we can give the little bit guidance for the 2 year, current year, next year. There will be improvement and subsequent later on also, which we have not calculated yet.
All right. And lastly, I just want to touch, there was an interesting note from MK wherein they had said that with the addition of these two segments, that is the stainless steel and ERW, they expect the revenue to double in next 3 to 4 years. So what is the kind of overall revenue potential? We discussed the short-term side of it, the near-term, but overall, how do you view it as in all in the next 3-4 years line of business with the addition of these two capacity additions that we are making?
Yeah, we are anticipating the growth will be around 100% compared to 24 closing. 24 closing were approximately 3,000 plus. So we are able to achieve 6,000 crore in next 2 years, and subsequently the growth pattern will continue but the capex will be completed, and then growth will continue every year.
Got it. Well, Mr. Mansukhani, thank you so much for taking our time and speaking with us at NDTV Profit and giving us those insights on Man Industries.